Hey guys, hello and welcome to another episode of Daftarkhwan Fireside. My name is Saad and I'll be hosting the session this afternoon and leading up to this evening. This session is brought to you in collaboration with the Hindsight Company, which is a corporate development firm with some really spectacular names on their roster. You can check out more information about them at thehindsights.com. If you're not already familiar with Daftarkhwan and what we do here, Daftarkhwan is basically a network of premium co-working spaces spread across Lahore. Currently operating over three different sites with more than 400 members, a ton of different companies, including the likes of AkzoNobel Chemicals, Kareem, Eid Mubarak, and the list just goes on and on. What we're aiming to do here is delivering the ideal workspace for businesses and innovators and giving them flexible products to optimize their costs and really enabling them or trying to enable them so that they can entirely focus their energies and their time on changing the world as it should be. So if you need more information about that, please feel free to get in touch, give us a call, and we'll take care of the rest. So very excited about hosting our guest today. Our guest is Mr. Faisal Aftab, who is the managing partner at Laxon Venture Capital. Hi Faisal, how's it going?
Hi, how are you? Good to see you.
Doing very well. Hope the weather's well in Islamabad. I'm sure it must be. I'm sure Lahore and Karachi is extremely envious of Islamabad at the moment. So I mean, I think like the first thing that I usually do in all these sessions is introducing the speaker. But I realize that there is absolutely no way that I can do any justice to the type of work and the sheer breadth of work that Faisal has accumulated over the last couple of decades of his professional career. I mean, Faisal is an MBA from Oxford. He is an entrepreneur. He's an investor. He's a consultant. He is an advisor, and works with the likes of 500 startups. He initially started off with Deloitte back in New York, National Financial Partners, MTV Networks, the government of Pakistan. So basically, you name it. If you can think of a company, an entity, or just like any structured or semi-structured type of organization, he's probably either made it, been on it, or assisted it in some spectacular way or the other. And the list just goes on and on. Right now, under his leadership, Laxon has invested in some really spectacular, really stellar startups that include Bookme, Mandi Express, and Knowledge Platform. And they also have two more deals in the pipeline, hopefully to be announced publicly very soon. So Faisal, thanks so much for taking out the time. I'm sure you're extremely busy these days as well. I know that everyone is still in a COVID hangover type of a situation, but the Zoom calls, they just don't end. But just to kind of bring everyone onto the same page, so everyone has some context about where you're coming from and where you are right now. Can you walk us through your career trajectory after you graduated from Michigan?
Sure, thank you. Thanks for that introduction, by the way. So, again, I grew up primarily in California. My father was a technocrat, and a civil engineer. So, a lot of my perspective on technology and infrastructure came from there. But growing up in California, one thing it does, it teaches you to think outside the box. So, I wanted to add that because I feel like, especially the Bay Area, because some of the greatest tech companies have come out of that region. And I don't know if there's something in the water there, but they always make you challenge the status quo. And there's no glass ceiling of thought in terms of how you should think. So my career, I started off as a management consultant in New York, basically advising a portfolio of investment banking and broker-dealer clients, and as well as investment management clients. Some of them were Rockefeller Investment Management, the Blackstone Group, Morgan Stanley, an entity called Bear Stearns, which was amalgamated into JP Morgan Chase. And the list goes on, and my focus was primarily in technology risk consulting, which basically what we were focused on was a combination of ERP implementation and then trading platforms. A lot of what happened in 2008, the financial crisis itself, we were actually the group that was trying to address that before the crisis. So where we did address it, those entities are still around. Many of the other ones that didn't engage us, especially in trading thresholds risk, are actually no longer around post the 2008 financial crisis. From there, I actually started wearing multiple hats after Deloitte. I joined a company called National Financial Partners that was actually founded by Sandy Weil's daughter, Jessica Bibliwickett. And Sandy Wiles, for those of you who may not know, he was the founder of Citigroup, which now is obviously Citibank is the most known entity. And so National Financial Partners was an entity similar to that. I was actually the seventh most senior executive in that company, and we were aggregating asset managers throughout the within the insurance industry throughout the country and creating essentially a Citigroup type entity within that asset management broker dealer and insurance segment. While I was doing that, I actually also had an entrepreneurial streak. So what I did was I was actually the co-founder of Indus TV Network and MTV Pakistan. So what I did was I actually one was to negotiate and bring the license for MTV to Pakistan, and there was a channel called Indus Music back in the day that we converted into MTV. Which, in hindsight, Indus Music was a better brand versus having the MTV brand. Always stay original is my advice. Um,
No, so let me also jump in right there. So, like, what compelled you to make that shift? Like, it's a huge jump from being like a financial executive back in New York to, kind of setting up this network in the media sector, and that too in Pakistan. So, like, what was the motivation there? Was it just like game of chance?
it's Sure, it was technology. So I've always been a technology, buff, right? So I always monitor what's going on. So actually, believe it or not, satellite and cable, which was what the mode was back then, it still is to a limited extent now, apart from Netflix and YouTube, which is now becoming pervasive gradually. But at that time, there was a big deal where you could backhaul fiber optic or on fiber optic television content on satellite from Asia and make it available in the US or Canada or Asia Pacific like Australia and New Zealand. And so that segment itself, I saw an opportunity, and all I did was I basically contacted the key distributors and tied up with the setup back in Pakistan and backhauled their channels, put them up, and it was a premium model like HBO, and that was the first you could say business that I started. That was at the age of roughly 28 that I launched that business. And I think what's important for a lot of entrepreneurs to note as well, and I think this is a confusion for a lot of people, is that to make that choice that if you're doing something, should I quit my job and then go do something full time? What I've learned in my life is a lot of some of the most successful entrepreneurs, initially, at least in their first or second attempt, moonlight, where basically they are doing something else during the day, and then they're burning the midnight oil on their passion or the new venture, right? It just so happened that the venture that I ended up setting up ended up becoming so big because keep in mind, this is 2005 and 6. So at that time, to see Pakistani channels or South Asian channels in the US or Canada was a big deal because you couldn't get these live streams. And then subsequently, you had ARY, Geo, and everybody else launch.
Yeah.
So just to answer your question on what that component was.
Yeah. No, super interesting. And at that point, you were still with National Financial Partners?
Yes. Like I said, I was moonlighting, right? That was my first venture.
Okay.
And then
And then what was next?
So next, obviously, once I did the first venture and I got really comfortable, so what I did was I basically saw the next disruption coming, which was the IPTV protocol disruption, where basically the linear satellite and cable distribution was basically being moved onto IPTV because compression standards had gotten better in terms of being able to deliver online as well as connectivity. So I started negotiating with a company called Jump TV, which was actually founded out of the Middle East, and ended up distributing all the channels apart from satellite and dish onto those platforms. And then I came across a company called essentially the Napster of Pakistan. I call our South Asian content called Jadoo TV. So these guys were basically just, they saw a niche. They basically put a box out there, a set-top box, and you could get all the channels from your respective countries. What they were operating under was something called the Digital Millennial Copyright Act, where basically if something is available free to air in one part of the world, it can be put up free to air in another part of the world, provided that the content owner must notify the set-top box. Obviously, my first interaction with them was they were violating my content rights
Right.
for the channel that I had. But when I met the founder,
started with the legal notice.
It started with a legal notice. But what incidentally, because I'd followed tech, my contract with the satellite and cable providers, apart from Geo, ARY, and the others that were present at that time, was the only one that allowed me to go non-exclusive on IPTV, which the satellite guys didn't think was going to be serious back then. So they said, fine, we'll let you go there.
Right.
So I struck a deal, jumped on that platform simultaneously, and I'd already been on a few IPTV platforms. So that's where the relation started. I said, hey man, let me go and I'm going to create a separate company, which is going to go and procure content rights. And then that's where the journey began, where I took a full-time plunge, created a content company that would basically be an app that aggregates all the content and would sit on the hardware set-top box. So signed up over close to 150 deals between South Asia, Persian content, limited Afghan content as well. Believe it or not, there's a massive demand for expat Afghans as well, and they're all willing to pay premium for this content. So that business took off. Then eventually Intel Capital came into that company. The whole co is Cloudstream Media, that the company where I was involved in.
Right.
And we also there's a company out of Bollywood called Eros. They make a lot of movies.
Okay.
They have a platform called Eros now. They're a New York Stock Exchange listed company. So then they ended up taking a stake in the company. I ended up, basically divesting some of my stake at that point in time.
Very cool.
And so that was my first full-time
entrepreneurial venture. Very interesting. And then what was next? What was after that? You started investing immediately, or did that take some time? Did you take a detour?
Yeah, so basically in 2012, when I went full-time into an entrepreneurial setup, I started moonlighting as my own portfolio manager as well. So I don't watch too much TV, so I have an overactive mind. So in the evenings, I'll sit down at least for a couple hours and read and analyze and come up with an investment thesis. So since I was managing my own portfolio, I was looking at macro markets, interest rates, understanding the whole relationship between the US dollar, the 10-year treasury, gold, and then the stock markets, and then how that filters into countries like Pakistan, because it's all about capital flow, right? So within that, one of the other things I was also doing, because I like tech as a passion, I ended up, at that time, there was a fund that was not launched newly called 500 Startups. So Dave McClure and his team were out there. Christy is the co-founder. So I ended up being one of the, I would say like the first probably 20 checks or so to that fund, right? And so that allowed me to learn how to invest alongside with them. So they were investing, and I would look at companies and invest directly. So built up a portfolio of companies. Some of those became big, some of those failed. But then that was the investment bug, you can say, in the training ground. And I think I was mentioning to you the other day that simultaneously I decided to, it was almost like instead of buying a Ferrari, which is what most people do the first time they exit a company, I decided to basically invest capital to understand how investments work, right? So I ended up investing in a fairly large dairy setup with Australian cows in Pakistan remotely while I'm living in New York at that time.
Okay.
And that, it was very state of the art. All the controls were in place. Everything I'd learned, I thought I'd gotten to the T. What I did learn was that in Pakistan, in a cash business, no matter whether you hire a guy from Al Marai or you hire some of the best resources, if you're not there to monitor them, the cash collusion just exists, right? And so ended up running that. It actually became a pretty popular product in Pindi, Islamabad. We used to have an organic dairy milk product. But it was just the production cost didn't make sense because I wasn't involved full time. So the reason why I'm highlighting that was a failure. I ended up winding that up after 2 to 3 years with a significant loss. I recovered about 20 cents on every dollar invested. But it's important because those lessons teach you each milestone. When you're going through these experiences in life, you never understand what they're meant for. But later on in life, you understand that these are the experiences that teach you how to become a better investor. And to make calls and not get eager and excited and slow the pace down, right? To analyze the market.
How long did you run that venture for? Like, when did you decide to pull the plug?
2010 to 2014, about 4 years.
Okay.
So it was doing fine, I think, about till 2012 or 2013 or so. Then it started really, having an impact. But again, it was, nobody else is to blame apart from me. Because I think I was naive in not understanding the local dynamics, right? Every country has its local dynamics, and it's very important to understand that. And for me, that was actually the catalyst to look at Pakistan as a different entity with a huge opportunity, but with its own certain cultural issues that you have to adapt to and learn from, right? Especially receivables and payable cycles here are very different than the developed market. And so you have to respect the local culture is my point, right?
Sure.
So as an
So
investor,
when you
you
yeah,
acclimate.
when you look back on that venture, would you do it differently or not do it at all?
I would do it differently. I mean, not do it. I don't think anything is for not doing it all. I mean, if I look at it, there were two lessons that I learned. One was if you're going to do any venture, especially with that scale, go all in, right?
Hmm.
And I mean, when I say all in, meaning put your personal time as well, not just skin in the game, right?
Sure.
The second most important lesson I learned there was timing, because actually the product is extremely high in demand today because people are more aware of organic products and high quality products, especially in the in the fresh produce and your dairy component, right?
Hmm.
Especially
Right.
post COVID and tariffs. I mean, there's been a demand for local cheese and local products. Um, so timing was the second big issue. I think 2010 and 12 was early. The right timing would have been around 2016 to 18 to launch that product to ramp up
Hmm.
basically now.
Interesting. Interesting. Very cool. And then what happened? So you pack that up, roll that back, and what was the next step for you?
Well, I mean, simultaneously, I was still doing other stuff, right? So this was an investment. So
Right.
that from there, I transitioned primarily into investing heavily, right? Where basically in 2000, again, I mentioned I was a global macro guy, so I would
Right.
look at hedges and everything from gold to obviously bonds to real estate to the stock markets. So in 2015, a close friend of mine from my MBA program, he requested space in my office. He's originally a German who lives in Australia, so he was doing a documentary on basically the death of money, which was basically a documentary on Bitcoin, which is available on Netflix and YouTube
Right.
if anybody
Yeah.
wants to
Yeah.
watch it. So he requested office space, and at that time I had no idea. I used to think this is stupid internet money. I have no idea where this is going,
Hmm.
and he invited some people that are now famous, Roger Ver, Charlie Lee, this is Bitcoin Cash, Litecoin.
Yeah.
So I went out for dinner subsequently, and when I spoke to some of these guys, that's where I started realizing, wait a minute, there's something really serious here. These are actually
Hmm.
protocols.
Hmm.
I think just to backtrack for a second, I was mentioning IPTV protocol. So
Yeah.
I'll give your audience a bit of a flavor of how the internet works, and this will also tie into my thesis of how I invest in Pakistan, because it's all interlinked: geopolitics, technology, how countries behave with each other. It's about rising empires versus rising empires challenging existing empires. So if you look at the internet, how it started, basically you had DARPA that released the TCP/IP layer, right, which is your basic protocol for communication, and that was essentially initially done as a project to within this defense department, and then eventually rolled out to the UK to go in overseas fiber or cable, and then basically it was rolled out to the public. So it went from an intranet to an internet, which was what we know as
Yeah.
the World Wide Web. Now,
Right.
two things are very important here. One is connectivity, the speed of connectivity. So back then we had dial-up in the first Web 1.0. We had dial-up, and we had basically only one protocol, TCP/IP, as the core layer, right? So the
Right.
disruptions that were happening at that time were bound by these two rules in terms of capacity. So capacity in the protocol. So the disruptions would have been postal systems via email, right? And then yellow pages, which used to be that thick fat directory, which a lot of the younger audience may not know, where you would look up things versus googling them, right? Look up where
Yeah.
restaurants are, telephone numbers. Those are disrupted, very baseline things. And then as connectivity improved, we went to DSL. Then you started seeing things like travel agencies being disrupted. You started seeing like pictures being downloaded. So digital cameras started disrupting traditional cameras. Then we moved on to fiber optic, and then we had this entire social media boom where everybody's sharing pictures left and right. Simultaneously, you had mobility, where once you had the power of connectivity of the laptop or cell phone in your hand, right here
Yeah.
with the 3G, 4G connectivity, then you had your next generation disruption like Uber, Airbnb, the shared economy. Well, the internet to be improved each time, the money flow starts from the protocol disruption. I told you the first one was essentially handed out by the US government, right? The
Right.
next one after that, you had basically the voice over IP disruption where voice had to be digitized. So now there were about seven, eight protocols competing for that game, but really one of them won, right? And at that point,
Right.
when that disruption was happening, the things you wanted to be investing in as a venture capitalist was WhatsApp, Skype, the communication platforms. Those are the hottest
Right.
ones because that's where all the incremental capital would come because that was disrupting things like long distance and the traditional telecommunications company and their business, right? Then the subsequent layer that came in was the IPTV layer, which was basically taking video and the medium that we're speaking on right now. This was being disrupted from your traditional feeds of analog or linear feeds into digitized feeds, right? And so at that time, you wanted to be investing in things like Netflix, YouTube. Some of those are household names today, but at that time,
Right.
these were startups basically.
Yeah.
So the disruption that's happening today, and this the reason why I'm mentioning this ties into Pakistan. This is the exchange of value disruption. So basically, the very concept of money itself and how money is going to be exchanged in the future is basically going to be digitized and go on the internet. And money not being digital is what's holding back the velocity of flow of capital throughout the world because technology is moving at basically 500 miles an hour, and our money ability to send money throughout the globe in a traceable manner. I'm not saying to like hide it,
Sure.
is basically being restricted by governments and regulation just because
Sure.
people have a tendency to try to hide money, right? So as the
Right.
marriage of the two happens, which is also known as fintech, but fintech is the downstream effect. Really, it is
Mm-hmm.
the exchange of value protocol, and those protocols is what these cryptocurrencies and all these blockchains are. And there's a confusion in terms of the blockchain technology. There really can't be blockchain technology. It is a technology without the cryptocurrency because Bitcoin, for example, all it is showing you, and again, it's speculative, so we don't know which one of these are going to survive. The likely ones that will survive or look like they may survive are Bitcoin, Ethereum, Ripple, Litecoin, potentially. Then the list goes on. There's interoperability layers and all this
But
stuff,
there
right?
was one that Facebook and like all of these big players
Libra.
were also putting the, yeah, yeah. So what about that?
So
That
those are
yeah,
the next generations, and I'll
right.
explain to you once these protocols basically, which is kind of evident now which ones are going to. It's been a decade, right?
Sure.
So all Bitcoin is showing in its price value. I just want to explain that component.
Mm-hmm.
It's the adoption rate. So just like when the DivX, for example, was adopted, right, and that
Sure.
became the player of choice in the IPTV realm. Um,
Yeah.
Similarly, Bitcoin would if that was being traded real time. Again, as I mentioned, you had to invest in Netflix or YouTube to capture the value in that protocol, right? This time,
Mm-hmm.
the protocol itself has to prove that it's unhackable, it's been around for a long time, and how much value it can store. So Bitcoin right now is storing $200 billion of value, right?
Yeah.
So that's
Yeah.
a significant size of an asset. And so that eleven
Yeah.
thousand dollar value or $10,000 value is
Mm-hmm.
basically the adoption rate. So it's the number of people in the world that are, and I think that adoption rate is less than 1.5% of the planet today. So you can only imagine where the price is going to go. Again,
Yeah.
Ethereum is a platform above it. So now coming to Libra and stablecoins. So again, I don't think we're going to use Bitcoin and these cryptocurrencies in our day-to-day payments.
Yeah.
These are basically those collaterals of last resort. So similar to the role gold plays in the system, that is what
Mm-hmm. Mm-hmm.
likely Bitcoin will play. Where if let's say China and the US refuse to recognize each other's currencies and there's some sort of a extreme stress post trade wars or trade blockades, then the settlement might have to be a neutral asset that nobody controls, like gold, right? And so if you're going to
Yeah.
build the entire world digitally without cash, and that's what FATF and OECD Common Reporting Standards are indicating, right? In terms of our regulation in the world we're living in today, then you have to build that financial structure step by step. And that's exactly what's playing out. So, why am I talking about all this? What's extremely important to talk about all this in the context of where we live. We live at the confluence of the two empires, right? Which is Pakistan. This particular piece of land that Pakistan occupies has been a historically important place. Essentially, it's one of the ancient trade routes, the old Indus Silk Route. Sorry,
Right.
it was basically had always gone through these locations, right? The
Yeah. Yeah.
pivot of the economic center of gravity of the world, the global economic GDP of the world, from 1 AD essentially started in this area, and it looped
Yeah.
back around. So you look at McKinsey's study; it's actually looping back around to this part of the world, right? And what does that mean? That means that countries around that benefit. So again, you're probably wondering why is this guy talking about all this stuff and tying this into venture capital. I'll get to that in a second,
Yeah, yeah,
um,
yeah.
because there's a confluence of a disruption happening, right? So let's go back to. So I think I've explained gold, I've explained Bitcoin and the exchange of value protocols, and then
Sure.
why Pakistan and why the importance of venture capital and geopolitics, and especially what
Right.
you're seeing in terms of Pakistan joining a new bloc with China, Bangladesh, Nepal, Iran, potentially Turkey and Qatar.
Hmm.
It's tying into this whole change of the globe. So the last time we went through this was between the years of 1914 to 1945, where
Right.
basically a rising empire, the United States, was challenging a diminishing empire, the United Kingdom.
Hmm.
And the reason was it was a debt issue, where the UK had basically pound was the reserve currency, and they'd overspent on debt, and they had too much debt. So the US did a technology disruption, which was known as the Industrial Revolution, and they basically became the reserve currency post that, right? And then the barons that disrupted the landed class, which was your princely states and the feudals and your monarchies, essentially became the industrialists. They became the barons of the Industrial Revolution.
Hmm.
Well, what we're
Right.
living in today is basically the digital age, information age, is disrupting the Industrial Revolution, right? And a
Right.
rising
Yeah.
empire, China, is basically disrupting the US because they've gotten better in technology, right? So hence you see the trade war is really about Huawei and ZTE, right? That's an important
Sure.
component. It's about TikTok and Facebook. I mean, it started off with like trade war and trade sanctions, and if you notice now it's turned more heavily into TikTok versus Facebook and Instagram, or Huawei ZTE versus Cisco and Juniper, because the rails of
But
the future
okay.
money flow. Sure.
Yeah, yeah. So in terms of the technology and in terms of, kind of like a handover of power, this shift in power that you're talking about, do you um, do you see that happening, given the amount of innovation or given the amount of IP that the United States economy still kind of controls? That you're right, that the ecosystem is kind of shifting, and maybe not shifting, at least spreading, like all across the world, and China is emerging, like, in a big way. But the Silicon Valley, at least in its perception, is still perceived as, like, the mecca of technology and innovation, and where all of this is happening, and how those innovations are being replicated to some extent, or being captured, that value is being captured in other parts of the world. Do you see that as a clear shift happening towards the east, or do you think it's still a back and forth between the two?
So it's not symmetric. So look, let's isolate Silicon Valley, which is going to be the Silicon Valley companies are what's going to carry the U.S. economy forward, right? But definitely
Right.
the traditional economy in the U.S. is contracting, as you can see, right?
Hmm.
In China's case, they were not the ones that invented this technology. The Americans did, right?
Sure.
But what the Chinese did was they basically adopted it quickly and they perfected upon it. So when it comes to
And build
artificial
it like
intelligence,
mad. Yeah.
when it comes to digital payments, for example, which is the current disruption, right? China is more poised. They're 96% of urban China is digital, right? You cannot pay with cash in urban China. It's QR
Yeah.
codes, right? The US still you can pay with cash. It's not as digitized. Most people deal in cash. Well, it's digital cashes, but it's a banking system and credit cards. It's slightly like comparing that to your QR code and your mobile peer-to-peer payments is like comparing the
Sure.
telephone landline system to cell phones, right? It's really
Yeah. Yeah.
archaic.
Yeah.
So the signs are there. Everything that I'm saying, obviously, look, I'm a global macro guy, right? So for me, the
Hmm.
pace of time and thought process is 10 years is what I project out to. So when I see these things, the confluence is always a gradual curve, right? So let's say if the US was here in 1991, it's only gone from there to here. And China went from here to here. So the reason why you're seeing this little
Hmm.
cross is China's crossed and met the US. That doesn't mean the US is going down like this. They may
Sure.
move parallel for the next 30 years. What
Hmm.
I personally think post COVID you may see is that the rise of China as a regional superpower and a technology player, and the rise and the US remaining a superpower, and basically the world being just multipolar. And this may last for the next 30 years. Nobody goes away overnight, right? But
Yeah.
for us to read it in terms of geopolitical politics and Pakistan, it's
Hmm.
extremely important to understand that because those forces are impacting our country, both from the Chinese
Right.
and the American side, right? And then
Sure.
when it comes to technology, why is this important? Well, as I'm investing in these companies, I'm picking the companies that the two digital empires that are battling each other. Again, they've migrated into the information age, right? And they're represented by the Tencents and the Alibabas and the Fang
Sure.
entities, right?
Yeah.
Basically, they're going to enter Pakistan in growth by acquisition. So case in point is Easy Paisa being acquired by Ant Financial, which is owned by Alibaba, right? Or it's the investment arm for payments for Alibaba. Alibaba obviously directly acquiring a Pakistani company, Daraz, right? Now the Americans are going to likely enter via the Middle East. So, for example,
Right.
Souq.ae was purchased by Amazon, right? And it's Amazon.ae. And you'll see them make their foray, I think, in the next 24 to 36 months. I know they're already scoping out e-commerce platforms. So obviously for us, it's about, as I invest as an investor, it's about looking at the companies that are going to have the likely exit, because I'm being measured on being able to cash out and give money back to my investors, right? That's my
Right.
performance.
Right. Right. And
So
being
it was
able to
very
predict the
important to
future.
add this in context. And I wanted to
Yeah.
swing you
Yeah.
around from that point because that is the most important component. It's about payment
Yeah.
platforms, right?
That's
That
super interesting. And like, the way that you put it, it sounds like, I mean, obviously, like this is the next thing that's going to happen because, um, in terms of like intrinsic value of Pakistan and the Pakistani startup ecosystem, like, do you see any intrinsic value coming out of this particular area or this particular ecosystem as well, or is it just a matter of positioning, that there's, this is turf and this is strategically critical in physical and other ways as well, and there's a matter of regional dominance, there's a matter of the countries around being huge and having huge assets and having huge markets and populations and access to sea. Is it just about that, or are we special?
Um, I mean, unfortunately, it is about that because we're the junior partner, right? So if the proverbial politics would be Pakistan is the kingmaker in the new global world order, right? So we could be like a smaller party that joins an alliance to make the government, right?
Cool.
So that's why this pivot between the U.S. and China. But
Yeah.
intrinsically, I'll talk more about the ecosystem, right? So let's hone into tech now. Why do I feel like this is an extremely
Yeah.
undervalued asset? Well, look, we're now talking positive. I mean, I view as Pakistan as very positive. I'm extremely bullish on Pakistan. This is the fifth most populous country on the planet, right? Yeah, that's a big deal. We're nuclear power, so security. If we didn't have the nuclear weapons, there's probably a chance that we would have ended up like a lot of the other countries around us, like Iraq or Syria, where transit route countries typically, when powers fight, they do proxy wars, right? So luckily, that ability in our strong security state has protected us to some extent. I'm not. I don't have a dog in the fight, so I don't think in political terms. So I'm just making that clear. I just have to. I'm an investor, so I have to have no emotion, right?
Yeah.
So when I look at the country, look, China has to connect via CPEC to Iran for energy security, right? They want energy security from Russia and Iran.
Sure.
Now, as they enter, they're going to bring investments in. So what is one of the things that they're doing? They're laying out fiber optic, right? So we used to have two internet nodes, the Singapore node and the Dubai node, right? And
Right.
bandwidth is
Right.
pretty high and costly in Pakistan. After the new node that's coming, the Chinese node and the peace cable node via Angola, internet connectivity cost is going to drop significantly, right? What that's going to do is make data affordable for everyday people. Now let's look at our adoption of smartphones. We're the fourth fastest growing country for broadband adoption in the world, with roughly around 750,000 users coming online on a monthly basis, right? How are they coming online? They're coming online via 3G and 4G and through smartphones, because your mass population cannot afford laptops and desktops. They're priced out. So the 6,000, 8,000 rupee Oppo, Huawei, or Q Mobile phone. I don't know if Q Mobile is still around, but they used to be really popular at one time.
I
So
think they've
those Android
rebranded as
devices,
Q something else.
yeah, okay. I remember they were initially around.
Yeah.
So that's where the adoption is taking place, right? So now what's happened all of a sudden? Why is this an opportunity? Well, India and the region, Middle East, India, Malaysia, everybody launched 3G and 4G in 2008 and 10. We, because of a regulatory hurdle and delay, actually launched 3G and 4G in 2014 and 15. So as an investor, I would not have invested in Pakistan in 2014 and 15 because my total active market, addressable market
Yeah.
for online users was less than 20 million active users, right?
Right.
Today, that number sits at 80 million. So that's a huge difference. That's critical mass, 80 million, right? It's bigger than
Yeah.
like
Yeah.
the whole countries in Europe, just our online user base.
Yeah.
That means that any use case or platform that is launched now scales really rapidly, and that's what you're seeing with platforms like Bookme or Mundi Express or Bikea
Hmm.
or
Hmm.
Kareem,
Hmm.
where the users are sitting, but there's no local use cases, right?
Hmm.
And those use cases, the rails for the payment platform economic activity are being put in place by these platforms, right? So Easy Pesa is sitting there, but it really has no use case. So it just turns out that BookMe with its bus tickets turned into that use case, right? For Easy
Yeah.
Pesa, Jazzcash, and these guys. And so
Yeah.
all the companies that founders are building, you always have to think as to what point in space and time you are. And I think the idea and what you go after, or the problem you're solving, it's extremely important to see the surroundings around you, right? And the
Hmm.
relevance, because ultimately, if you want to attract capital,
Hmm.
the capital is only going to go where it sees opportunity, and that opportunity is linked to these global macro and geopolitical,
Hmm.
you can say the points, right?
Hmm.
That you have to consider. So it may be too complex in terms of what I've explained to the audience, but I'm trying to tie it all in because it's extremely
No, no,
important to
it's
understand.
actually super interesting, and I think it's not that complex because it seems like you're kind of running a story, and that kind of simplifies the whole deal a lot. And when we were speaking earlier, you also mentioned that you don't really pay attention to stuff that's happening in terms of like the media and current affairs and stuff, and you live in 2031. So what's happening in 2031?
Now you're gonna make everyone think I'm crazy. That was an offline conversation. I'm just kidding. No, so look, I'll give you an
Not to be taken
example.
out of context. Yeah.
Look, no, no, not at all. I'm glad you brought it up. I'll share my thoughts on that. Look, some of the smartest, when I was young, I mean, I've always learned and looked at other people, right? And tried to understand individuals. So Jeff Bezos, the founder of Amazon, he has an ode to long-term thinking. So the thesis for a lot of these founders is that if you think on a day-to-day basis, by definition, you turn into a day laborer because you're worried about putting food on the table tonight. You're like, I'll worry about it tomorrow. A lot of us live in on a month-to-month basis, right? So we're salaried employees. We just want to put food on the table, and we worry about our white-collar job, right?
Sure.
When you enter business, at 28, I learned that, right? When I entered my first business, you stop caring about the month to month as much because you basically have to work so hard yourself that you typically address a year in advance, right? Of revenue and associated business. So then you start thinking 2 to 3 years out, right? So the longer you think, the more long-term view you start having, and the short-term noise starts to get blocked out, right? And so, for example, Jeff Bezos's ode to long-term thinking, he's building these clocks in the middle of the desert. I believe it's in Arizona, which basically every millennium these mechanical clocks are going to pop out. The guy's a little bit wacko, but he's also built one of the most expensive companies, right?
Yeah, yeah, yeah.
So
Got it. Yeah.
I'd ask people to go look that up. So it's called the longer term you think, and that's, by the way, how these empires think, right? So the reason
Hmm.
how a country becomes an empire is that they don't think short term. I mean, the US with China, and they were positioning when they were offering nuclear energy to India in 2005. They were basically trying to break India away from something called the BRICS, right? Where it was alliance was happening, and
Yeah.
India was going to be the second largest economy in the world by 2025. It will be, or by 2025 to 2030. So the US knows that as its dominance in the world starts to eventually everything comes down, right? So they
Sure.
need some other currency or big power to be priced in dollars. So you have to think like big founders and big empires. And the longer term you think, you just trace things back and then work and develop your business in accordance with that, right?
Interesting. Yeah. Um, Tell me something. So, like, all of the time that we were speaking today and earlier as well, like, I've also been wondering that our discussions have been so broad in terms of like the sheer number of disciplines that you touch upon while explaining a subject from financial investment to global macroeconomics to history and to pretty much everything under the sun. So I'm also curious as to like what allows you to like how do you process information? Like this is a very Tim Ferriss podcast kind of a question, like how do you think type. But like yeah, I'm like genuinely curious that is there like a framework or a way that you kind of think about things? Where did that start? Because obviously, like, you're absolutely right. It's also kind of rites of passage when you start working. Initially, your horizon begins to expand as you go on. That happens in business, and that happens to a professional at pretty much any stage of the career. As you keep going along, your horizons begin to expand. You start thinking bigger in most cases. But for you, it seems like that progression and the way that you're thinking about things, and even like that's also reflecting in how you're progressing through your career trajectory. That's also at an accelerated pace. Um, and so, like, even right now, you're looking way ahead into the future. So, like, where does that kind of thought process come from? Like, is that Michigan State magic? Is that Oxford magic, or has that just always been there?
If I had to credit it, I'd credit it to two people, I guess, influences. One was my father. As I mentioned, he was technocrat, and when he's a Berkeley grad, civil engineer. He actually designed most of the highways that I think I was mentioning to you that CPEC is being built
Yeah.
on in the early 90s, when the first motorway was being built. And the motorway police is his design, which was modeled after CHIPS, the California Highway Patrol. And it was about
Okay.
empowering
Yeah.
people, that he wanted to prove that if you hire people that are educated, BA graduates minimum, they're more than likely to, you know, be more compliant with the law, right? I don't know how it is today, but back then at least they didn't take bribes. So I don't know if that's changed over the
Still
years.
head and shoulders above. Still.
Right. Okay. So I think he was a huge influence, but the major influence was also California, like I mentioned earlier. Growing up, I did my middle school and most of my high school in California, in Berkeley, California, Bay Area. So growing up there, one of the things, because California was the third largest, the U.S. was the largest economy in the world, and California was the third largest economy in the world at that time. This is the 80s, right? Mid 80s. So they
Right.
were always eons ahead. This is when Sun Microsystem, Unix, all that stuff.
Hmm. Hmm.
Apple, early days of Apple,
Sure.
I'm developing. So thought process has already evolved there, right? And one of the things that they always taught us was to think outside the box and never have a mental glass ceiling in terms of thought, right? So that is, sometimes we tend to create demagogues in our brain, where basically individuals we value so much that we assume everything that comes from them is correct, right?
Hmm.
And what I do is I try to always avoid that, right? I respect people, I follow people, but I also do take into account that we've been given free will as a creation, and that is a huge gift. And so if you think outside the box, those things can happen, right? So the rest is all life experiences. I mean, at the end of the day, I think we all have different capabilities, and
Hmm.
everybody has various skill sets. There's a lot of things I'm really bad at, man. So this is just one thing that it worked out. And luckily what I did in life, uh, I ended up doing in life is synonymous with my way of thinking. But I can assure you, if I was sitting in some structured environment, I'd probably be the worst employee, right? So, like, nobody wants to hear about geopolitics when they're like, it's an assembly line.
Yeah, yeah, yeah. You'd be sidetracking the meeting all the time. I can totally see that. But okay, interesting.
Think
Like
that
the
my advice is, at least for entrepreneurs in this industry, and
Yeah,
hopefully this is what 3.0 is going to be the final blow to the traditional economy, right?
right, right.
You have to think outside the box. Most jobs are not going to exist in 10 years. I
Hmm.
think artificial intelligence is being extremely underestimated today. It's just, think of it like as a toddler today, where it's just
Hmm.
learning as more and more data is fed. And some of the advancements in China and the US in terms of artificial intelligence, and parts of Europe as well, are
Sure.
extremely, extremely ahead of the time. And hopefully one day in Pakistan as well.
Hmm.
And I think that anything that's logic based, like legal, accounting, things like that, even medicine, like OPD, basic layer of medicine, where you walk in and somebody asks you for the symptoms and then prescribes a drug. I think that's going to be disrupted, right? These are just small examples of things that will
Hmm.
be disrupted. Like cashiers
Hmm.
will be like, they used to be in history. If you think about it, they were type. There was actually a job called a typewritist, where basically you had to have those skills,
Yeah.
and there's no concept of people, everybody knowing how to do this, right? That doesn't exist.
Sure.
Your personal
Sure.
computer disrupted that, right? So a
Yeah.
lot of jobs, I think, are going to be disrupted.
Hmm.
The industrial age education system, which took alchemy, which was basically taking all subjects and understanding them, from a relatability point of view, it took them and put them in silos, right? So you're studying math and you're studying chemistry, and you're not putting the link there together. Or physics and math have a closer link, but ideally you want to be able to understand quantum physics, as well as maybe understand how that links into mathematics and even
Hmm.
in terms of computers, right? Which is what quantum
Hmm.
computing is. And so
Right.
the more you think outside the box, the higher chance you have to survive with creative skills in the future.
Hmm. Hmm.
So I think it becomes more important to do this. I in fact posted something
Right.
on LinkedIn about this. I'll share that with you guys post. There's an
Yeah.
article.
Fantastic. We'll we'll include that here as well. And I mean, this could go on and on, and already we have a few questions pouring in, and we'd like to take a few of those as well. But like the last thing before we move on to the Q&A is, in the immediate to short term, uh, what's your advice to startups in the Pakistani ecosystem right now? Any particular areas that they need to be focused on? Any particular issues that you see, that you feel like are like easily fixable, or that could really uncap the growth for a lot of these startups that you assess? And what can they do on a personal level, given all the regulatory and compliance and all of that legal issues that exist in the environment?
So I think regulation and compliance stuff will be sorted soon, because a lot of the stakeholders, all the VCs, have been working hard on it. Some of the legal firms as well. So I think that those things are. I mean, and again, regulation has never stopped anyone, right? Google, Facebook, a lot of
Exactly.
these
Yeah.
guys wouldn't be around if they were worrying about that stuff.
Yeah.
What really, if you, I would actually address more those that are thinking of doing something new, and that have an entrepreneurial instinct. And like, basically, you have to understand. Look at again, like I said, Pakistan doesn't have the best academic system to teach basically accelerate things like robotics and AI. Well, I know people are working on those things, but the funding and the research isn't there, right? So at this stage, what you want to do is you want to look east and you want to look west and see some of the successful models, and then see if you can apply those to solve a problem locally. You can't just port the idea. You have to look at a local problem. And trust me, there's lots of problems. I mean, you could do something as simple as basically creating an R&D setup that is starts learning autonomous driving in Pakistani traffic with goats and like
Hmm.
motorbikes swinging left and right, because that's something
Yeah.
Tesla's capability may not show that, right. In terms of their data points are all in like symmetric markets. So I'm just giving, there's
Yeah.
lots of ideas out there that one can
Hmm.
work on, and actually you could get
Hmm.
grants and funding for.
Hmm.
But it really just comes down to thinking outside the box and applying it for the local setup, and not getting. I mean, I always hear this thing of the next idea is like, this is a $100 billion idea. The market job opportunity is 100 billion. And I'm always like, yeah, if we could just conquer Pakistan with your
Yeah.
idea.
Yeah. Yeah.
It's the fifth most populous country. We underestimate ourselves. This is going to be a G20 country by 2030s. I can assure you that. Last parting thought I'll leave you is that our debt to GDP ratio is around 78%. We are a $300 billion economy, roughly, right? I can assure you the informal economy of this country is about another 300 billion, right? So
Yeah.
what's going to
At
happen
least.
in this? Sorry? Go.
At least.
Yeah, at least. My
Yeah.
estimates, it's probably about close to 600 billion, right? But I'll be
Hmm.
conservative. Now, what's going to happen is this decade, and you're going to see this with FATF, OECD Common Reporting Standards, and the push for cashless systems, right? This is what we're working on now in terms of these use cases. What Kareem is doing is nothing more than documenting the informal exchange of value between a driver and a ride hailer, right? Same thing, Bookme is doing the same thing in the bus segment, right? Or the
Right.
travel segment.
Hmm.
So what's eventually going to happen is once payment gateways plug into this, our informal economy is going to leapfrog in documentation. It doesn't matter what the
Hmm.
FBR and these guys are trying to do. These tech
Sure.
platforms are going to do it. And so this country is going to leapfrog in GDP growth, not by productivity alone, but by simply the informal economy. 3% of 300 billion black economy does
Yeah.
still add 3% to our traditional GDP, right? And no matter
Yeah.
what you do in a country like Pakistan, that's a frontier market, the documented economy is still going to roll at about 2.5 to 3%. Even after COVID, we're still basically didn't go down as much as the developed markets,
Yeah.
right? Because we're
Yeah.
just a
Yeah.
growing country. So
Yeah.
don't underestimate Pakistan. Don't lose hope. This is the bear market right before the extreme bull market. And I can assure you that if you just simply put your effort there, everyone is going to be worth 10x more, even a fruit stand guy in the next 10 years, as the economy grows. That's just a natural phenomenon, right? As long as you work hard and focus on things. Didn't
Yeah.
mean to sound like a student-teacher relationship there, but
No. I think that sentiment and that inspirational kind of ending note was also absolutely critical. Faisal, thank you so much. This speaking to you is always borderline mind blowing kind of an experience, and gives me so much to kind of go on and learn more about how the world is kind of changing. So thank you so much for sharing your thoughts. So for
thank you for
everyone
having me.
who's kind of yeah